The markets opened much lower today based on the, I guess, problems with the tariffs and the negotiations with China. However, after opening much lower, they closed back up in the range, providing a belt hold signal. This was more evident in the Nasdaq that as soon as it opened, the candlestick investor could see that the buying had occurred because your green candle was starting. Once again, it came all the way back up into the trading range today, uh, providing a belt hold signal. Remember, a belt hold signal indicates that they took out a lot of sellers and the bulls stepped in. So the confirmation we'll be looking for tomorrow is the market opening positive and trading positive, confirming that they're staying above the T line. A lower open wouldn't necessarily mean the uptrend is over. It would probably just tell us that there's some more consolidation. And unless they closed it all the way near the bottom of the range, it would tell us that that we're still in a slow uptrend in this market. Patterns like the classic pattern as we're trading in Papa John's PZZA was still in progress today. Even though it opened lower, it closed higher, confirming the classic, which is a fry pan bottom followed by a J-hook pattern. This put us still in a situation that even though the markets opened, traded lower and closed lower, there was still strength in this classic pattern situation. And our positioning in AVID stayed good because we had the best friend gap up, we had a doji sandwich at the breakout area, we have a J-hook pattern, and even though the market sagged, it traded positive most of the day. The reason a pattern is much more effective is that it is already the buildup of investor sentiment, creating a pattern that we recognize that will usually exhibit the same results time after time. So we have a much higher probability that even though the market might be sagging, the pattern that was developing because of accumulated investor sentiment is still moving in the right direction. Our position in Rubicon, RUBI, was based upon the fry pan bottom and then the buy signals coming right off the 50-day moving average, continuing the uptrend. Even though it traded slightly lower on the day, it still showed that after they opened, they were buying this position. The benefit of being in a candlestick pattern is that it's already got a cumulative investor sentiment building up in it, not being so much affected by a daily price move in the markets. The stronger sectors could be identified by the ETFs that were acting well, as we saw in LABU, L-A-B-U, the biotech sector. Big bullish engulfing signal coming back up off the or up through the T line, basing at the same level it based a couple weeks ago, giving you a double bottom. But even if you're not trading this ETF, at least you know that the biotechs are probably an area that you want to research to see if those are good trading situations, because the ETF is showing that there's money going into that area. Recognizing a pattern setting up and knowing that the results of a T-line trade where it continues to trade above the T-line allows the investors or candlestick investors to identify where the investment strength is remaining and has the prospects of doing a strong price move, such as a fry pan bottom breakout. This is just merely identifying what normally happens in human nature, which is the basis for price moves. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Candlestick signals are merely the graphic depiction of what's going on in investor sentiment. That'll be it. We'll see you in the chat rooms.